Welcome back to Zer0es. I'm Tyler Neville, sitting down with Carson Block for a very important flash update. Everybody wants to know right now what the heck is going on with China. So, Carson, why don't you just take us right into it? What are you seeing there right now?
Everything that I'm about to say has the caveat of nobody really knows what's going on behind the curtain. This is my best divination of what actually is going on. But I think there are two sets of issues here. There are some industry specific issues which you're seeing with Didi Chuxing and then the education industry. But then there's what I think is the big picture here, which is what's relevant to everything from China that's listed in the US. And what I think is going on there is that I think Xi has realized, well, I think he's determined that China will not acquiesce to the US on the PCAOB inspection of auditors issue. And this is so I've changed my view. I thought China would acquiesce at the 11th hour. I've long thought that. I just think that the relationship between the two countries is at a point right now where politically she feels it's either advantageous or, maybe not possible to acquiesce, and it's advantageous to hold the line. But so I think what's happening then is he's decided China will not acquiesce on this, and then he views U.S. delisting of the China companies as inevitable, even though the Holding Foreign Companies Accountable Act, which was enacted in December, really, there's a kid gloves element of that act in terms of giving a multi-year runway for these companies to come into compliance. And P.S., the SEC has had the authority to delist these companies anyway under Sarbox. But I think that, she was looking at a couple of things here, which is number one, that the HFCAA passed the Senate unanimously. I don't think there's anything else that's passed the Senate unanimously in like decades, probably. I don't know. Maybe there is, but
Hmm.
that's a rarity. So politically, I think it would be very difficult for the U.S. not to delist these companies in a few years when China doesn't comply. And I think he's also looking at the trajectory of the relationship between the two countries. And in the most charitable way of describing it is probably sideways, vis-a-vis when Trump left office. In reality, it's probably in more of a downward trajectory. And look, I mean, China has certainly kicked off the Biden administration's tenure with some pretty bellicose statements. So, it's not that Biden's entirely to blame or to credit, depending on how you look at it, with a hard line here. But in any event, I think she figures it's inevitable that the U.S. will delist these companies. So why put the VIEs, future VIEs, under review? Why make these moves now against publicly traded companies or U.S. traded companies? And I think the issue is that um, also for domestic political reasons, she does not want the U.S. to be seen as, throwing out the garbage, kicking these companies out of China. I think it's important to his image and that of the party, and the whole, their whole nationalistic playbook, that this be done on China's terms. In other words, that wasn't that the U.S. It's kind of like arguing about who broke up. Like, no, I broke up with you. You didn't break up with me. So I think that that's really what's going on here. Is she is trying to force this process whereby companies that are presently listed in the U.S. need to start thinking about how they're going to get off the U.S. exchanges. So, I think you'll see some dual listings that accompanied by delistings in the U.S. The door to future listings in the U.S. is, I mean, probably closed. I mean, if I'm correct, you're just
Yeah.
really not going to see many, if any, listings of China companies in the U.S. going forward. Um, but also, some of these companies might get bought out. You have to look back at what China did in 2012 to 2014, I would say, where state-owned policy banks funded LBOs of numerous take privates of complete zeros. Like these were companies like Harbin Electric. Everybody knew these things were frauds of frauds, and yet China spent state money to pay premia these things, to pay U.S. investors to sweep these problems under the rug, so that among other things you could get the Alibaba IPO and lots of enthusiasm for it. So there might be companies acquired at premia too. I mean, that's something to watch out for. So if you're on the short side, and if I were trying to play that from the long side at this point, I would have no idea of gaming which companies would be. I think it's probably the obvious alternative market here is Hong Kong. But in my view, Hong Kong does not have the liquidity to absorb all of these companies. So your first tier companies listed in the US, I think they'll be the ones that can easily have delisted or relist in Hong Kong, have ample liquidity there, or at least reasonable liquidity. But it's your second, third tier companies that would have the problem. And so maybe some of the second tiers end up getting acquired. Maybe that's the way to play it. Not a pronouncement. Don't go and risk real money on this, please. But anyway, that's what I think is going on. So this being education, look, the education industry, I think, was the for-profit education industry, especially when it came to test prep, fairly predatory. I mean, it's like it is in the U.S. Like at the end of the day, rather than students getting an edge by using these services, it becomes something that everybody has to do just to keep up, like doping and cycling or something. And kind of a hat tip to China in this regard for saying that's basically an extractive industry or predatory industry, and we're going to put an end to that.
Has there ever been a point in history where $100 billion kind of sector of the economy has been decimated like this from, centralized power? It seems like a pretty draconian scenario to extract that value out of the market. What do you think he's thinking? We've seen, they banned Bitcoin mining, they've banned U.S. listings, and now it's just like closing the capital countdown. And now they're closing down the education sector. Is there something bigger going on here? We've heard a lot of rumblings of China Evergrande delevering, their bonds are selling off. Is there something more pernicious underneath?
This gets into the, who really knows. Clearly she wants to. So if you go back to what happened with Jack Ma and the IPO of Ant Financial, Jack Ma stepped out of line, right? He made public comments criticizing the party's attitude towards fintech, and they don't get it. They need to be much more forward thinking, and the party reminded him that they don't actually. And so I think that there could be, on one hand, some element of let's make sure that the large tech names are brought to heel, and that these guys don't get too big for their britches, as Jack Ma seemingly did in the eyes of Xi Jinping. But there's also there's another take on this too that I read today, actually, that's pretty interesting, and it's by Gavekal Economics, and that and they point out that what we think of as tech in the U.S., we think these online companies that social media, whatever, we consider them tech. But I mean, the reality is the technology there is actually not high tech. I mean, they're just really good at marketing and social engineering and what have you. But if you look at especially from the perspective of China, which is now, China has a real strategic issue in terms of assuring chip supply, given where it wants to be, and given that it has a mantra of focusing on being an industrialized country, as in manufacturing, which the U.S. is, kind of lost our way on that for the past several decades. So if you look at it from that perspective, China probably does not think like Tencent and Alibaba are really tech companies. Yeah, they have AI. I mean, but the Chinese government, I'm sure its military complex is pursuing development of that, also in connection with the nominally private sector. But from that perspective, it's not really crushing the tech industry. And to the extent that foreign investors lose money, hey man, I don't know. The writing has been on the wall for that for at least a decade, that you don't really matter as a foreign investor to the Chinese government. So, and that's been the hubris all along. When I would talk about these issues with the just perpetual fraud in these names and the VIE structure, and there was always this arrogance on the part of U.S. and European investors that, well, they would never screw us. We're too important. Like, well, guess what? You're not. I mean, it's kind of like that. That's how China, China understands leverage probably better than any country, and Chinese people probably understand leverage better than any people I've encountered. And the moment you're not needed, don't expect to be needed. So I think we're seeing that as well.
Can you walk us through your experience with GSX and TAL a little bit? I know everyone's dying to hear kind of more in-depth thoughts there, because you were all over this thing for like almost a couple of years now, and it played out eventually, like you said. That's got to be a little bit of a good feeling on your side. But just walk us through the events and kind of how it played out.
So look, I think I'd be remiss if I agreed that it played out as we said it would play out. If you go back to 2012, we actually were short publicly New Oriental Education, EDU, because even though it was a real business, there was fraud there. I mean, they had, this was pretty crazy. We had the then president CFO, Louis Xie, recorded in a conversation in which we were asking, does New Oriental have any joint venture schools? No. Any franchise schools? No. Everything is wholly owned. Do you have any cooperation? No. Everything is wholly owned. I think something like 7 times in a row. And as we were having this conversation, we were in possession of a franchise agreement that, for one or two of their school formats in China. So it was a complete lie. So they actually did have franchises, and this is a form of fraud. It was unclear to us how it impacted the financial statements, but what was clear to us is that the financials couldn't be trusted. And the problem that we faced during that time, that's when China's Ministry of State Security, the Guoanju, cracked down on the entire due diligence industry and short selling industry in China, or the China appendages of the short selling industry. So we weren't able to keep our foot on the throat there as a result. But then in 2018 we shorted TAL, said it's a real company with fake financials. I mean, what we found there was a fake disposal and reacquisition of a company on which TAL booked a $50 million pre-tax profit. Like, it never happened. TAL had a business. They said, hey, we sold it, got $50 million profit that constituted, I think, maybe almost half of their net income that year. But they never sold it. And then a year later, said, the seller, they changed their strategy. So, we're so nice, we bought it back. And it was total bull. We found another business that they had started and then they disposed of, or they deconsolidated it, and then they got outside investors and they were able to take markups on it. So more fraud. Okay, these things, incontrovertible, they happened. We put our report out. TAL's response was maybe 4 or 5 sentences. My comment at the time was, it looked like they, somebody banged that response out while taking a in the morning or something. And, the market was like, oh, that's cool. But TAL kind of followed this playbook of, okay, let's lower guidance going forward. Let's miss and we're going to blame it on some, new Chinese regulation of the education industry, which, there are always regulations, but basically I think Tal was following this playbook of deny. Nobody really cares if we explain it thoroughly or not, explain the denials. So just deny, let these guys make their money, then they'll off, and then we can just ramp it up again. And so that's what Tal was doing. GSX was a different story. Like, GSX is a fake company with fake financials, and that just was manipulated massively. This is the guy who is most responsible for it. I think, Bill Huang of what I call arch egos. By the way, this is not real arch ego swag. We made this up. I don't think they really ever would have the tagline, "Thou shalt not delever," but it was never far from their minds in practice, though. Anyway, so look, these shorts weren't working out brilliantly till Bill Huang blew up, and then GSX started to fall apart. Got an unqualified audit opinion. To me, they're clearly round tripping money in order to do that and keep the sales line inflated. But what ended up happening here, with China moving against the education industry and saying that for-profit education companies are going to have to convert to nonprofit, I think that was really in response to just this societal problem of these companies being pretty predatory and making Chinese people like largely unhappy, because effectively everybody had to go and spend money and time getting tutored up just to keep up with the competition. But, so I did get a number of congratulations when this was announced, and, gee, you were right. I mean, like, we're right about these companies being frauds. They didn't blow up directly as a result of being frauds. It was indirectly. And here's how it's indirectly a result of being a fraud. This system in China that allowed these things to commit the fraud, get away with it, protected these companies from investigation, from enforcement. Okay, basically the system that allowed these frauds really caused these frauds in the first place. That is a system that does not give a about foreign investors. And so going back to my comments on the arrogance and the hubris of foreign investors, who thought that, hey, all of this illegality, or let's call it criminality, it's a one-way trip for me, man. Like, it's, I ride this up. No, you just didn't see that they'll pull the rug right out from underneath you when they feel like doing it. And because they don't care. They never cared what American, they never cared what American regulators thought. They never cared about American laws. And once they feel that they can function independently of U.S. capital, at least the U.S. capital markets, they don't care about you anymore either. You're not that cool. So this is how we got here.
Now, present day, fast forward, Gary Gensler comes into the SEC, who now is actually on Twitter, which is pretty crazy. Is this a new regime? Are we going to now start cracking down on this stuff now that, the cat's out of the bag? It's very apparent this has been going on for years and years and years. We have SPAC mania. We have, these Chinese things imploding. Is he an indication that capital markets are going to change from the SEC's perspective?
I mean, I think he's better than Mary Jo White was, but look, we live in a world where the spirit of the law is violated perpetually. The letter of the law is not. And that's our capital markets today, right? We are we were anyway, a strong rule of law nation, but the problem that created was, because we're rule of law, when you get the really, really smart lawyers on the other side, along with lobbyists, they're able to violate the spirit of the law. And that is, I can look at almost every quarter of our society today and say that has gone on, and it has in turn eroded the rule of law and eroded a lot of things in our society. So can Gary Gensler put that cat back in the bag? Probably not. And I think, and he's a creature of that too. He's, That's the problem. I mean, that's where it really burns my ass when we get like a Mary Jo White to chair the SEC, because she absolutely is part of that system. Um, so I don't know, man. I like I'm a professional cynic, so don't expect me to say anything like really positive on these issues. But I don't know. It's probably business as usual, and it's just a question of how quickly do things erode further. Fast. They're not going to erode as quickly as they did under the Trump administration. But maybe more like Obama administration speed. We'll see.
And this is a bit of a more macro question, but so over in China we have Xi delevering the system. It seems taking some air out of pockets that are ripe with fraud. In the U.S., we're printing $120 billion a month of QE. We're doing giant infrastructure plans. Bankruptcies are negligible. Foreclosures negligible. It seems you've called it a post-truth world. How do you square those two things? Because it's like over here in China, they're almost trying to have like a more just capital market system in some ways, but it's centralized power. And here we continually bail out things. Like how do those two things kind of interact?
Well, I mean, China's a perpetual bailout too, and don't forget, it's a state-owned banking system, so they don't even need to announce anything as a bailout, right? They can extend and pretend more or less
Mhm.
till the end of time. It seems. I didn't used to think they could do that till the end of time. I thought that rules of what I had learned were rules of economics did apply, but I don't know. The rules that I learned are probably wrong. Um, China is a massive credit and asset bubble, regardless of where whose balance sheets contain how much debt. I mean, when you look at the amount of credit in that economy, and I have a feeling that a lot of it's understated too, especially because China owns the banking system. There's a lot of credit now when we're talking about regulation. It's funny because if you the only regulators in the world Elon Musk seems to fear are in China. He's definitely not saying she sucks Elon's. So yeah, like a little bit of a tip of the cap to China, which I mean, I don't know that the motives are pure, but at least they're bringing some of these industries to heel right now that have been presenting problems. And that's obviously something that the United States appears to be completely incapable of doing. So, yeah, that's basically, and I don't, again, like for-profit education was a problem has been a problem in China the way it has been in the U.S., but it's been this way in the U.S. forever, and nobody's talked about hey, this is like doping, and we should just basically do something to try to eliminate it. I don't think that we really can under U.S. Constitutional frameworks. I think you pretty quickly run up against the First Amendment at some point there, but in any event, so I think that mixed in with all of the malign intent and corruption of the CCP, there's some element of we need to please the people in ways other than saber rattling and nationalism. There's some substance there. So, at least for the moment, maybe the motivations aren't the best motivations, but the actions are somewhat positive for Chinese society.
I guess we'll see if the next Fed meeting will pull off the gas here in the U.S. But in
No,
in the
no.
meantime, that probably presents more opportunities from the short side.
Yeah, more opportunities to think that you can make money and then watch your go up. Yes,
But all
exactly.
right, Carson. Thanks so much for the update. Really appreciate it. And we'll stay on the story going forward.